Welcome to the Ideal Investor Show. This is the podcast where we help you challenge your mindset and discover where you are. Tired of stories about other people's success? We can help you change your life, determine your time freedom point, and join us on the journey to financial success. Let's go. Hello and welcome to the Ideal Investor Show, where we bring you interesting guests to speak to us, for me to learn, pretty selfish, and for you guys to learn, and for finding out a little intricacies and little benefits. And today we have Mark Kappelman with us, and he is an expert in real estate investing and accounting. Mark, welcome to the show.
Thanks for having me.
Tell us a little bit, how did you get to where you are today? And I saw in your bio that you work for Price Waterhouse and some other pretty name brand big organizations. So tell us a little bit the journey, the origin story of Mark.
Sure. So even before, went to school down in Arizona, at Arizona State, didn't know what I wanted to major in, ended up picking accounting. A couple uncles told me to go that route. And when you come out and got my CPA, back then it was just kind of like audit or tax. So I went into audit because I didn't like tax. Just, you're either a tax guy or you're not, or gal. And I went to work for Ernst Young, did that for a few years. Then went to work at PwC. I transferred with PwC up to Chicago, chased a girl up here. And that's an important part of the story, actually. So then that girl, we ended up getting married. But in the process of doing so, we always wanted to get into real estate. We always wanted, and I read the book, Rich Dad, Poor Dad, which is so cliche, but that's the book that I read that kind of got me hooked. And so I had in my head, real estate, real estate, real estate. And one day my wife, girlfriend at the time, or fiance at the time, said, hey, look, there's a real estate seminar on the way home, walk home from work. And it's all about flipping houses and, how do you make a bunch of money in real estate? It's free. Let's go to it. And so we went to it. Long story short, we were just so into it that we said, hey, look, we can flip a property. Let's go do this. My wife's actually a CPA too. So we were both accountants, but looking for something entrepreneurial. And we went in, bought a house, bought it for $120, put $60K into it or thereabouts, and sold it for like $280. And it was just like light bulb just went off. And we were like, wow, we actually did this full cycle. And of course that took about a year, but I'm telling the story a little quicker just for to get through it. And so anyways, after that, then we did a couple more rehabs. Then we started building some houses. And then really where it clicked was we bought a 6-unit multifamily property, just terrible. Those drug dealers, it was like a rough building, but in a good area, and bought it cheap, put a bunch of money into it, refied it. And, by the time we did all that and, got commercial debt, got a non-recourse loan, we actually got more in debt proceeds that we'd put into the property. So we actually cashed out all of our equity plus some excess debt, and which is of course tax-free because it's a refi. And from there, we were just hooked on, okay, now we really want to do multifamily deals. And so that's kind of how I got into real estate. And then just the quick story is, we were still working as W-2 employees, but now the real estate thing's starting to grow. We're reading all the entrepreneurship books that are like, hey, look, outsource all your admin, focus on the things that generate revenue, which for us was buying new deals, buying more properties. And the admin for us, even though we were CPAs, was the accounting. So we outsourced our property accounting, thinking, okay, it shouldn't be a problem. They'll understand real estate. Problem is, they didn't understand any of the particulars of real estate. They'd never seen a closing statement. They didn't know how to book a refi. They didn't know how to book closing costs. Just nothing was recorded correctly. And then the response times were bad, and it just was a bad experience. And so we started looking online saying, who's just focused on real estate accounting? Property accounting. Couldn't find anybody. That's really where the idea for REIA came from, is that we had the problem and we decided to solve it, and then quickly realized that a lot of people were having the same problem. And that's, really how I'm talking to you today. That's how we get here.
That's really cool. And I want to come back to a few things that you mentioned, but can you maybe explain a little more what exactly REIA is doing?
Yeah, sure. So REIA is 100% focused on real estate, bookkeeping, accounting, but almost specifically and more specifically property management companies. So, our two customer types are really third-party property managers. So there's probably a lot of your listeners that own multifamily or own deals, and a third-party manager is doing the work. right? So we are the accountants producing the financials that probably your listeners are receiving. So when you think of the Appfolio reports you receive, the Yardi reports, the Entrata, Buildium, I don't know what system the property manager might be using. We support all those applications. So we're doing literally the bank reconciliation, adding all the bills, categorizing everything, reconciling the mortgage, reconciling the escrows, and making sure that the balance sheets and the income statements and the T12s and all that you are, the end investor is receiving are accurate. So that's kind of customer type one. And then customer type two is the vertically integrated, what we call owner operators. So your listeners or just people like myself, that still owns real estate, they own the asset, but then they also property manage it. You're still using Appfolio, Buildium, etc. But all of a sudden, the users of the reports, it's a little different because now the client you're doing the accounting for actually owns it too, and he or she's got a bunch of investors that need K1. He still has to give reporting to those investors. So, we are, a lot of people will call it business process outsourcing, but bank recs, accounts payable, financial statement close, those are kind of our three bread and butters that we focus on for property managers.
Okay, yeah, that's really nice and concisely described. I thank you for that. We are, I guess, at least for myself and for the clients of Ideal West Grower, and I'm always hoping there's a bigger audience beyond that out there. But for us, for our more internal tribe, it is exactly like you just described, with a slight difference that our majority of investments is into like single family, duplex, triplex properties through turnkey providers. So one of the things that I would immediately be really interested in service for our audience would be the turnkey providers that we're working with. The two main ones that I have for my portfolio the one has, I think, 1,200 doors and the other one has like 800 doors. And interestingly enough, like 85% of those are actually single family properties. At least with the other one is about 50-50 between single family and multifamily. But the question that I would have is, when they generate the 1098 at the end of the year for either whether it's one property or multiple based on the Appfolio information, is there anything specific either in the end of year Appfolio statements or in that 1098 that our audience or myself, we should pay close attention to when it comes to how do we then, especially since I always preach, have everything through an operations company that is organized as an S Corp, so it flows through to the 1040, to the personal tax return. Are there any things where you would say, hey, here's stuff that you want to pay close attention to between the monthly and then end of year report in Appfolio, which is actually, I know we had Buildium for a while and some others, but Appfolio seems to be the market leader.
Yeah, no, it's funny you say that because I maybe I skirted that part of the story, is that the actual first piece of real estate I ever closed on was a turnkey single family home rental. And I actually have 3 in my portfolio today, Jacksonville, Memphis. Yeah. And so that is actually where my first investment was made. I think where I don't want people to make mistakes with 1098 is that just something that I didn't realize, and it's just a small little nuance, but when the property manager sends you your 1098 at the end of the year, generally speaking, that statement is like the gross rent that they collected for you. But what you need to make sure is that, yes, that number needs to go on your tax return, but you need to also make sure that you capture all the expenses that person charged you for. Make sure that you capture all the interest expense that you're paying for, the real estate taxes, because for all the turnkey or single families that I have being third party managed, they're not paying my mortgage or anything like that.
Right.
So
exactly.
I always have a separate set of accounting books, actually QuickBooks, because I'd receive the statement from the property manager and might say, hey, Mark, we gave you a distribution of $1,000. Well, of course, that was just like $1,100 of rent minus $100 property management fee, $1,000, but I still have to pay the mortgage. And I'm pretending or assuming there was no maintenance bills that month. But I think it's just making sure that people aren't making sure that you're entering in your tax return all the expenses that you're paying on behalf of that property that the property manager is not capturing. Because the profit number they're going to send you is a lot bigger than the actual profit that we all know that we're netting. And so that to me is just make sure your tax accountant, or if you're doing it yourself, that you're not ignoring and forgetting all of these expenses, because then you'd be paying too much in tax.
Absolutely. And I mean, the way we have organized it, and I would hope you would agree that that's actually a reasonable way to go. For our idea West growers, like I said, we always recommend that they set up an LLC in the form of an S corporation for the operation of their business. And partially also, I'm at least always encouraging them to adopt a business owner mindset, even though they might be a W-2 employee for whatever kind of job. But when it comes to their investing, to have that from a business owner perspective and kind of grow into that. But obviously, the way we're doing it is basically having a bookkeeper who is very familiar with QuickBooks to take the AppFolio monthly statements, and one of the main organizations does actually an end of year summary report. The other one doesn't. But if you have all 12 months of the statement sometime in January, it should normally be okay, because those show all the expenses as far as property management goes with repair bills and stuff. And then add that basically to the other expenses that LLC had, right? Because you might have an office, or you might have a computer, or you might be driving to certain meetings, or you do some educational stuff and so forth. So those would all be expenses that LLC,
Absolutely.
they would all flow into that QuickBooks return, so to speak, or the QuickBooks data that then ultimately as a file gets shared with the CPA that does the whole final thing. And I have 2 companies plus the private stuff. So, obviously that's a little bit more of a complex CPA required tax return.
Yeah. Well, I would say, REIA is an S corp, and the entity, the flipping entity that I always use is an S corp as well. So I've always utilized S corps in my business as well.
Yeah. Okay. So when you spoke about your origin story, one thing that kind of, my brain is sometimes weird when it kind of locks on to stuff, right? So
Sure.
I honestly have to say I'm amazed that I know you now, and kind of by connection your wife, and you're the only 2 CPAs who seem to be handy enough to renovate a property. So
well, maybe it's going to change your mindset, but I didn't lift the hammer on any of those properties. We always hired general contractors. If I knew one thing, what I was good at was finding deals, raising money, and getting the equity and debt. And ironically enough, my wife was in charge of the project management, so she was in charge of managing the contractor. She's actually much more handy than I am.
Yeah, and see, I was kind of hoping that either you or your wife would be in that category, because I wasn't really truly believing that you were basically ripping sheetrock off or stuff like that. Not because I wouldn't think you could, but it's probably not the best use of your time. But one thing that I think is interesting is and you already did it, touch a little bit on the skills, right? Like, it doesn't, on the one hand, it doesn't mean if you find a suitable property and it's close enough so you can actually do the renovation yourself, that you have to be like a contractor or a handyman to make that happen. But I believe if you aren't that, and you are not very well organized, or have like a affinity to project management or program management, then it can get really tricky, right? I think you have to have one of the two, some organization skills, kind of like being able to handle the numbers and keep in budget and make sure that stuff happens on time. Even if you don't swing the hammer, I think if you don't have that and not swing the hammer, then it's probably not going to be a great deal in the end.
We always say trust but verify, not only in my accounting business, but kind of just in general in anything. And I just think we actually tried to outsource the contractor management at one point, and it's just, the individual was not vested like we were. He was getting paid a salary. He didn't have equity or skin in the game, and he wasn't as focused as we were. So I think you're spot on. Like, you probably don't want to be the person swinging the hammer unless you swing a hammer for a living and you got a general contractor business too. But I think, yeah, absolutely. I mean, these contractors go from job to job, and you need to make sure they're there, hitting deadlines, the work's getting signed off by the city. There's a lot that goes into it.
Absolutely. And see, one of the things with IDOL Score is that our strategy is called out-of-state turnkey investing to real estate. So with that, why I'm always preaching how important it is to find the right turnkey provider, is because of that, because you can't be there. And so then how do you actually generate that kind of engagement and that kind of care? And what I found is, if the turnkey provider is finding, like kind of you were describing, that the ugly duckling in a good neighborhood, and they put the money in to renovate it, put it on the market for a price that it appraises for, knowing that they also going to be the property managers to manage it later, that dynamic is kind of similar to what you were saying. When your wife is managing that the contractors really do it and do it right with good quality, that's kind of inherently in a turnkey provider like that, because when they know 3 months after finishing the renovation and closing has been done, they are the managers of the property. They would be
Yeah.
they would be stupid if they make a shitty renovation, in a sense, you know.
Yeah, you're right. No, you're spot on.
Now, with Upfolio, I've seen a really kind of impressive update recently, and I'm sure you're very aware of that. Are there any things that you would say for the investors, and you mentioned you have your own investments still, that people can or should pay attention to when they get their Upfolio reports on a monthly basis, and especially in the new version or in the updated version with the dashboard and all that kind of interesting stuff?
For me, it's all about the quality of the reporting. And so I like to see not just the owner statements. A lot of my single family homes, I should say, I'm relying on their owner statements because I keep my own balance sheet of the property and stuff. But, at least as you get into multifamily or even small, single family homes too, it's all about net operating income. So you got to make sure that the NOI is being captured correctly. They're not putting things through the P&L like capital improvements. You want those on the balance sheet. These are the things that, as an accounting firm, we're super hyper focused on. That's really what I would say. And the more access you can get to the system, the better. Sometimes property managers don't want to give you kind of full access to run your own reports, but we definitely have some clients that, some property management clients that allow their end investors to have a little more access. You're talking about the owner portal, but even access to kind of run some of their own reports. So I think if you're one of those people that really want to be more hands-on, then I wouldn't be afraid to ask the property managers for a little more heightened access to Appfolio or any other system that they're using.
Yeah, absolutely. Although I have to say, what has worked for me and for our clients at least, and I believe anybody else who is working with property managers that use Appfolio, is, to kind of first have them show you all the stuff that's available. Because yes, with the new dashboard, you can create your own reports. But I, for example, just even well before they ever did the most recent update, I said, okay, I would like to see the 12 months cash flow statement for each property. Right. And that
Yep.
gives a beautiful summary. The data is being entered anyway. Right.
Yeah.
So that's, for example, one of the ones that I know some property managers don't automatically make available to all clients, but it's for them, it's easy. They just check a tick mark and then it comes as part of your owner package. And so that will be for anybody who is at that level in the weeds, wants to know. I find that is basically the best overview for your property to see what has happened throughout the year and where's the money gone and how much has come in and what's been distributed, all that good stuff.
Yeah, you're right. There are a ton of reports in that report center, and you're also right that they just kind of they being the property manager, set up a template that says, hey, these are the reports to include to Axle each time. It's the 12-month cash flow, it's the rent roll, it's the AP aging, it's, and these kind of set things. So it's a good point.
Yeah. One other thing, since we rarely have a real estate expert CPA available to us, going a little bit beyond the property management, what other things would you say in this setup that I'm recommending? And I'm really mean this to anybody in the audience. If you don't have it already, you can even do it before you start investing into any kind of real estate to set up your LLC. What other things would you say somebody should be aware that they have eligibility to, or are entitled to, or can do, or should do, to basically strengthen the tax side of the business, or basically what ultimately is being recognized from the taxes? I know that the deduction or the depreciation is one of the things that pretty much everybody jumps on.
I kind of explained in the beginning, I'm not a tax guy, actually, even though I'm a CPA. When you become a CPA, you're either a tax guy or girl, or you're an everything else guy. So I actually have somebody else do my taxes. I've got a CPA that specializes in real estate. So, for example, this year, I'm thinking not just real estate, but there's an EV tax credit for businesses, not the personal 7,500 one that phases out with income, but there's a business tax credit for EVs. That's something I'm thinking about this year. It's not just real estate specific, but on the real estate side, the other thing to think about, at least from my world, when I'm doing rehabs and multifamily and stuff like that, is cost segregation. Because cost segregation allows you to accelerate. It's not just book the depreciation, but accelerate it and pull it up into earlier years so that you're getting large tax deductions, which if you qualify as qualified real estate professional, the QREP status, then you can use that depreciation to actually offset your active income. And so I think, that's probably the biggest tax tool that people can use if you can actually qualify for it. There's rules around, you have to put X amount of hours into your real estate business. But if you can qualify for that real estate professional status, the huge thing there is that passive losses like depreciation, they kind of ignore passive and active. So depreciation can offset your W-2 income. And that's where people who make a lot of money on paper can end up not really showing much profit and very little tax. Number of friends that are utilizing that.
Well, I mean, I think that is a great idea, especially when somebody is kind of saying like what we call journey to the time freedom point, where it's basically a transition from a typical W-2 life, so to speak, into a passive income life. And oftentimes, after a number of years, when the portfolio is growing to a certain size, it can easily go from, okay, I've been working my regular W-2 full time and I'm turning it down to half time, because I think it needs to be, you don't want to give people reason to doubt what you're reporting. If you say, okay, I'm a director of whatever kind of company somewhere, and you're claiming that you have another 30 hours a week available for another job, at some point you basically just, I always say, you're waking sleeping dog, so to speak, in a way.
Right.
But if you say, okay, I've transitioned from full-time to half-time or to maybe on-demand work from home or something like that, then you can maybe make a credible argument that you're more active on your investing side. And so I think that's a great thing. With the EV thing that you mentioned, I just want to make people aware that, and this is something that I kind of did wrong in the very beginning. I looked, and maybe from being brought up or whatever it may be, at things pretty black and white. And I found that you have to look a little more and not just be like that, either it is 1 or 0 or it's on and off or black and white. For example, with a car, right? You can have a company car even if you only use that particular vehicle 10 or 20 or 25% of the time for company business. And the same thing, precisely. You can have an office in your house or a room in your house that you declare an office for your business, for your company, and that takes a certain amount of whatever kind of expenses you have, whether it's your electricity or your heating or your mortgage payment or what have you. And people might say, is it really worth it? But I really believe, like your prime example, paying attention to the details, right, and having stuff properly recorded, that ultimately adds up over time.
All those little things. I think it's a great point on the home office deduction. I mean, like, I'm looking around at my home office right now saying, yeah, I take a tax deduction for this. Why wouldn't I? I'm running a good-sized business out of this being my office.
Right, exactly. Right. And the point I wanted to get across with that is another reason why I'm such a big proponent for having your LLC, right? Because if you say, I have a company, here is the employer identification number, here is the seat of the business, and I need obviously to have a place to operate from. It's always been tricky when somebody says, well, I'm working for ABC company, but I have to have an office at home. Now it's gotten a little better with the pandemic, but as soon as you can say, here's the business and the business seat, the operations of the business is in this property at this address, it's a no-brainer, right? And so
that's a great point.
And ultimately, I want to encourage people, when you really want to do the non-tax filing related stuff properly, to get in touch with somebody like you and find out what can be done or follow your example. So by that being said, how can people get in touch with you?
Yeah, the best way is to go to our website, www.rea.co, not .com, but .co. There's a contact us button. You can book a call, schedule with us. You can find me personally on LinkedIn, Mark Kappelman. Maybe we can leave that in the show notes. But yeah, pretty active on LinkedIn, and yeah, of course, the website.
Yeah, that's very cool. So I always ask two questions at the very end of every episode that are the same. So the first one would be, if you could meet anybody, past or present, who would it be and why?
I think it would probably be Richard Branson. He is probably the most, there's a lot of people, but he's just the most inspirational. I think he's one, obviously financially successful, but he just seems successful in all aspects of life. Great family, lives on an island, seems to always be having fun, doing different adventures. I'm a fan of work hard, play hard, whatever that saying is, or however you want to think about that. And I think Richard embodies that to a T. I've read all his books, and he's definitely kind of a mentor from afar for me.
Absolutely. I'm fascinated by him to some extent as well, because he seems to always been somebody to say, just because everybody says it can't be done doesn't mean it shouldn't be tried.
Sure,
Companies, but
yeah.
There were a lot of things where I very vividly remember that first came out in the media and stuff, and people said basically, oh, this is completely crazy. I mean,
he's incredible.
Yeah, well, I mean, it's kind of like the same direction to say, just because people tell me it can't be done, it doesn't mean.
Yeah, I think just Richard has more fun than Elon.
Yeah,
Elon, he has meetings at 11 o'clock at night, and I think he works himself to death.
No, you're right. I agree with that. Richard Branson definitely knows how to live.
Yeah, right.
So, okay. The last question is, if you had a time machine, where would you go and why?
Well, since this is a real estate show, my answer would be, transport me back to 2009, 2010, and I would have raised as much as money as humanly possible, and I would have invested in anything I could get my hands on, because I think anything you bought at that time, single family, multifamily, outside of maybe office. I didn't buy my first property until 2013. And I know that those single family homes that I bought in 2013, they've almost all doubled, close to. And I haven't done anything other than just let the market ride. So everybody always says, hey, what advice would you give? And I'm just said, start now. I wish I would have started earlier, and, we can't go backwards. So there's no time better than just start today.
Yeah, absolutely. I'm with you. I'm actually piggybacking on that. There is and since we both have German names, I can probably use that. There's a famous guy, his name is Andre Costolani. He was one of those gurus for stock market investing. And they always ask him, how do you become a successful stock market investor? And he said, you pick something that you understand, you buy as much as you can with the money that you have, and then you take a 10-year sleeping pill. When you wake up, everybody will pat you on the back and say, how did you do that? How is that possible? Yeah. And I would say maybe you need a 15-year pill for the real estate game, or maybe even 20. But
I like that.
As an analogy, it's kind of like, and I know sometimes when the markets go crazy, it's tempting. I remember like the house that we have in the San Diego area has basically doubled, even though I never thought we would be able to buy a $500,000 house. But if you told me like in 6 or 7 years it would double to almost $1 million, I'm like, crazy, that will never happen, and it did, right? And so it's not even just cheaper markets or more expensive markets, it's just the market, right? And I think that's also true with Costolani's like 10-year sleeping pill.
No, I'm going to steal that one.
Yeah, absolutely. Cool. Well, Mark, it was a great pleasure having you, and I have now a higher appreciation for CPAs that do flips.
Yeah, well, look, I hope your listeners got some value out of it. That's the name of the game here.
Yeah, absolutely. And maybe we can do it again at some point.
Sounds great.
All right. Thank you.